Hi, in this video I'll be sharing with you how you can use the RSI indicator effectively as a trader. So the indicator window is where we have the RSI, which is the indicator you are having in this zone. So I'll be sharing with you how you can apply the RSI as additional trading confirmation in order for you to make your entry. However, it is important for you to know that we don't trade the RSI in isolation. What that means is you don't just get into trade by just using an RSI. You might have heard that when the RSI pull back to the level of 30 or between 20 and 30, you buy. Or when it pulls to the level between 70 and 90, you sell. These are wrong way of applying it if being done in isolation. So what that simply means is we will need an additional price action confirmation in order for us to apply our RSI effectively. The setting for this RSI is period 14. You apply it to close and you have your level. The level is 30, 70, 90, 10 and 50. And once you've done that, you can now save your RSI. And on our main chart, we have our moving average. The period is 20, the shift is 0. The method is simple. You apply it to close. So once that has been established, you can come up to your chart. Now the RSI we are not using in isolation. It is also important for you to know that for this RSI to be effective, you must combine it with price action. Secondly, you need to know that one of the things you must do is that this RSI is also applicable to all assets. It is not limited to indices or synthetic derived indices. It is applicable to stock, to crypto, to forex, and every asset as far as trading is concerned. So let's begin. First, we want to determine our trend. And if you look at this carefully, you realize that this is an uptrend. We have a higher low here, we have a higher high, higher low, higher high, higher low, and a higher high. So with that in mind, we now know that we are in an uptrend. And you can see the price has been stable or consistent above our moving average. So having said that, here we have these zones here. So this is one of our structural points, which is our order block, and also serving as a support zone. So you can see this zone right in here, and you can see how price behaves. So what happened? Price came into this support zone. So you can see that we are combining with what? We are combining this with our price action. So when price came to this support zone, the RSI was at the level of 30. And we'll have this bullish engulf, this bullish hammer. You can see that hammer and that engulfing candle. So you should have bought here, and then as price approaches the moving average, you will need to exit the trade. As price is approaching the moving average, you will exit the trade. If you must go long again, if you must buy another time, this is the criteria. You must wait for price to break and close above the moving average, and also wait for the RSI line to cross above 50. Then you get a price action and you continue buying. So let's proceed and let's keep it simple. So here price has been in an uptrend, right? This is a higher high, price pullback and then give us another higher high. So knowing that price is in an uptrend, what do? You wait for a pullback. Look at what happened. Price pull back to our moving average. Can you see that? Come out a little. So you can see what happens here. Price pull back to our moving average here. And if you watch carefully, you realize that our RSI is above 50. So that is a good place to buy. We have this pin bar candle. RSI is above 50 level, which shows that we are in an uptrend. So you buy, and you can see that move all the way to that upside. Another time again, price pull back to this zone, to the moving average. And look at the RSI above 50. You should have bought here, and that is how that particular one plays out. So we are now using what? We are using our moving average. Wait for price to pull back to retest the moving average first before you can make your trade entry. So please pay attention to that effect. Price must close below it. And anytime you see price ranging in between, you can see the range, how price was moving here. This is a ranging market. And in that scenario, pay attention to the moving average. Can you see to the RSI, I beg your pardon? You can see that the RSI was actually playing around the 50 zone. So that is a range. Most of our range will happen when the RSI line is at the 50 level. And that is why we want it to close either below for us to sell or above for us to buy. And once the price begin to approach 70, we take profit for a buy. And when it begins to approach 30, we take profit for a sell. This will be discussed in more detail in the subsequent video. You can see this. This is a bearish pin bar here. That bearish candle, you can see our RSI. RSI closes below, and you can see that move to the downside. So this could have been your entry. Remember, I say once RSI is approaching 30, you take profit. So this should have been your take profit. It is not about being overbought or oversold. That is not the concept we are trading. So here is a bearish flag pattern. Remember, this is our bearish flag pattern. And in this bearish flag pattern, what do we see? It is our sell entry signal. So we have this bearish pin bar. Look at it. This is a bearish pin bar right in there. And RSI closes below 50. So that is our entry, and you see price pulling down. So RSI closing below 50 is indicating that we are in a downtrend. Of course, you see this pullback. This is not our entry, but here we have our entry. This is our entry, RSI below 50. Okay, so I'll be doing more detailed video on this, on how you can use your divergence, such as in this scenario. This is a divergence, and you can see how price play out from that zone. So I'll be sharing with you in detail what is divergence and how you can use the RSI divergence in finding your trade entry. You can see that pullback there, RSI below this, and you can see how price plays out beautifully well. So you go and do a back test of this on your chart. Okay, now let's look at other assets. Look at GBP USD. So this is GBP USD, and this is a typical uptrend. So let's look at our entry. Can you see this? Let me show you something. Look at our RSI above 50, and then you see this engulfing candle. So this has been your entry. When price approach 70, you take profit. Look at this again. Price pull back towards it. We have this pin bar. Let me zoom out a little so you can see that this works across all. This is a pin bar. Look at RSI above 50. That is your entry. When price approach 70, you close in your trade. Very much simple and profitable strategy that you can take advantage of. See that price went above. You'll be patient for price to close below the moving average, and then your RSI closes below 50. So it works across all assets. So let's look at boom and crash. Let's crash 500, and look at, in this case, obviously crash 500 has been bullish. There's a typical uptrend. There has been a typical uptrend. So here would have been our entry, bullish engulfing candle. Okay, that's our buy entry, and then we would have had this sell entry here. Break of structure. This structure has been compromised, and because structure has been compromised, we can now have this. This is the resistance zone. If you must use the overbought and the oversold, it must be either in an order block or in a support and resistance zone. For instance, price is at 70. This is a major resistance. So for a reversal, you can see that happening. However, every reversal zone are zones of manipulations. So you can stick to other zones in order to avoid manipulation. You can stick to continuations trade. Okay? Ensure the trend is established first. Once the trend is established, you are good to go. Remember, the trend is your friend, so you must trade. See this? There is another entry. See this pullback? Another entry. So you can go on and on and on and on and on. This is already close to this zone, so we are not taking that trade. So thank you for watching. Go ahead and backtest this, and let me get your feedback in the comment section. Thank you. I see you in the subsequent video.